Futures point to a lower open while the U.S. dollar shows significant strength following Greek and French election results and renewed global economic concerns. In equity-related news, Facebook kicks off the Investor Roadshow for its IPO. I'm Jill Malandrino, and the morning call starts right now.
Good morning, everyone. I'm Evan Lazarus with T3Live.com.
And I'm Jill Malandrino with The Street. And together we bring you the Morning Call Express. Evan, we have a big Monday on tap. We have Facebook taking it to the roadshow for its IPO. We saw futures get smacked around on the overnight, but it seems as if they come back just halfway.
Well, let's take a look here at the futures. I think it's a very interesting market that's setting up. And we talked about this last week. So it's sort of, kind of a little bit of follow through from what we highlighted, in the middle part of last week. Futures need to hold the mid 1350s. This has been our short-term support. It was just a couple days ago we were flirting with breaking out at new highs, and now we're right back down. So this is a very manic market right now, and you need to trade it very, very carefully, if even at all. If you are someone who's a shorter-term trader, I would say start looking from the short side more actively. If that's not your cup of tea, time to stay away from this market. There are just warning signs and very dangerous, pockets everywhere. If we break 1350, mid 1350s, we could be headed back to the 1300, even sub 1300 level. Now, obviously, that'll take some time, and we'll evaluate, but there are some clear danger signs in this market.
Right. Well, we're going to see a lot of headline risk because we have, it's going to be people commentating on what's happening out in France and Germany with their elections. And you also have Japan that just came back into the market today after being off all last week. And we have the UK closed today. So just by the virtue of that, we're going to see some volatility. When we jump into the sector, we're going to check the temperature of all the sectors. We only had one that slightly was green last week, that being telecommunications. But Evan, let's look at the OIH. Oil and nat gas names were really in the news last week between Conoco and Phillips 66, and of course the whole CHK debacle.
OIH has been a severe underperformer for a while. If you look at the chart here, as the market's been flirting with new highs over the last couple of weeks, the OIHs have come off substantially. We saw a little bit of a bounce earlier in the month, peaking to about 42, but in a matter of 2 days, just last week, Thursday and Friday, right back to short-term support in the the lower 38 area. This looks to me like it wants lower. Big volume here. You can see this big volume spike. On Friday, that's not a good sign. That tells us that in time we're probably going to see lower prices here. So, depending on what you're looking for in the OIH, probably best to stay away at this point in time. Okay,
when we go into the trenches, we're going to look at the retail space following same-store sales last Thursday. This seems to be somewhat of an outperformer with this group. Let's look at Lulu. That's a name that has capitalized on the $6 billion yoga industry, bringing in over $1 billion in sales just from that segment alone. So does it still have the momentum to continue?
Well, Lulu's been a better performer. Retail's been a really great sector for a lot of people for quite some time. You need to understand that if the market doesn't hold up, and we start to see lower prices and we break 1350, Lulu's probably going to come off. Lulu's sitting at highs. We can take a look here at the chart. We broke out, middle part of last week. Great looking breakout. Volume came up. That's exactly what you want to see. It really needs to build a base here above the 75, 76 level for traders, I think, to step back in and look for higher prices. Right now, I'd probably be hands off, probably neutral to the position. You can see this support level here at 76. It has to hold. If it doesn't hold, you could see, a breakout failure. Okay, in the long call version, we're going to look at 5 more names for the quick hit. But before we round this one out, let's look at Apple real quick. Obviously, we look at our market leader. Apple's been nothing but leadership for the market for so long. What led us up will lead us down, and that's just what we're seeing here. So we have to respect that Apple has not found a bid since earnings, even though it had a great earnings report. This is a funny market. Sometimes it's buy the rumor, sell the news, and that's exactly what you're seeing here. Seems like earnings have been priced in. We've seen nothing but sellers since the earnings report on that pretty large gap up, right back to where it started in the mid 560s. I think pre-market we're probably in the lower 560s. And to me, there's really not a good level of support, probably to around maybe 520, 530. This down move is getting a little long in the tooth, and we probably will see some sort of short-term bounce this week. But again, short-term bounce can lead to lower prices. So be careful here with this Apple, as it really is not showing us anything worthwhile. Okay, everybody, we have a lot to pay attention to today. Catch Evan at the end of the day as he wraps up the charts for us on options, profits, real money, and T3Live.com.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.